All right, you know what? Let's talk a little bit deeper right now about that slowing decline in U.S. manufacturing. Joining us is Norbert Orr, who heads the Business Survey Committee of the ISM, which report we were just talking about here with Kathleen. Norbert, thanks for joining us. Let me ask, does this seem like at least a greenish shoot to you? Obviously, it's still a contraction, but it's an improvement over the last year.
Well, it represents an improvement in the context of the index improving. If we go back to December, we were at 32.9, so moving to 44 range is very solid. I would agree with the thought that inventories are going to play a big role in helping the index come up in the next couple of months. So I think the recovery is forming. Obviously, we got a little ways to go yet as far as manufacturing. Our number also indicates growth in the overall economy. So there's some positives to be taken from this.
Let's underscore that for just a minute before we go on to some of the particulars, Norbert. Your index indicates growth in the overall economy. I don't think people get that unless they read your report carefully, because we focus on the 50 level and say manufacturing's not there yet. But above 42, historically, this is a sign the economy has started to grow again. That's what your index shows?
That's correct. And the contrast there, Kathleen, is that manufacturing for the overall economy has to grow at about a 2% rate in GDP growth for manufacturing to begin growing. So manufacturing, it takes more to drive manufacturing in terms of GDP.
You're in your report, Norbert, you also singled out the production index as the most encouraging sign in the report. You note that it's up 12 percentage points over the last 12 months. It's above 50. Are you least bit concerned that new orders have fallen back below 50 a bit?
We have to keep in mind that our survey is based on month-over-month change. And seeing it come in at 51.1 and then drop down into 49.2 doesn't really concern me that much, because it's not a lot of change from previous. It means that we've moved up to a new level of new orders, and we're holding on to that.
So what about the employment picture? We talked about that as well. That index is up around 40. We've seen job losses in manufacturing just hand over fist the last few months. Does this signal more manufacturing job losses tomorrow from the government report?
Oh, I think so. The employment lags, and I don't see that changing in manufacturing until we get to the point that we are seeing some fairly significant growth in manufacturing. It usually takes not just reaching 50, but going beyond that to get the growth.
Do you see, though, the job losses at least abating there? I mean, we had Chris Rupke on yesterday from Bank of Tokyo Mitsubishi. He thinks this will be the peak as far as the climb in unemployment, and that we're going to turn around, maybe this month, next month, give or take, but that we're right at the top there.
I think that's the case. We're going to see that the employment index gain some momentum over the course of the next couple of months, I think, as we get back to more of a normal picture for manufacturing.
All right, hang on a second, Norbert. We're going to take a quick break here. Kathleen Hayes is going to stay with us as well. More from Norbert Orr, chairman of the Institute for Supply Management Committee that released today's manufacturing activity report. He's got his finger on the pulse, so it's important to hear what he has to say. Stay with us. We'll be back in 2 minutes. Now, we are back with Norbert Orr, chairman of the Institute for Supply Management Committee that released today's manufacturing activity report. And it's interesting to point out that less bad actually is good because of the growth, because of the fact that you need to get growth back up to about 2% that you and Kathleen were talking about. We still, though, from this report show that the economy is starting to grow again. And I think that's a turning point that's interesting to highlight.
Yeah, our index would indicate that the overall economy, and there's certain industries this month in terms of growth, we had 7 of 18 industries reporting growth. So there, like I said, I think things are heading in the right direction.
Norbert, last month, I believe it was, when we talked, you talked about companies adjusting to the new normal. We hear that over and over and over. So even though we may be growing, we're growing off a weak base. And one of our viewers who loves to write to us while we're on air raised the issue that this isn't a typical post-war business cycle, that there's going to be the deflationary aftershocks from the financial crisis. And that's why your 42 gauge is not a reliable measure now of growth in GDP. How do you answer that viewer?
I would probably have the same question myself, Kathleen, because things, each time things are different, and only in retrospect can we judge these things as to whether how accurate it was and how well that fared compared to previous times. I think nonetheless, it's whatever the level is, we are heading in the right direction, and I think the overall the business cycle is at work, and we'll get back to a level of growth in between now and the end of the year.
Are people missing the extent to which inventories are still so low? A special question on your survey indicated that where their inventories used to be high, many of them saying now, no, they're way too low, and you have to at least rebuild your inventories, and that creates some growth.
Well, we asked the inventory question in two ways. One, what's happening to your customers? And secondly, what are you doing? It's obvious that manufacturers have been very aggressive in trying to cut their inventories, but they've also had to live with their customers being very aggressive in cutting the inventories of finished goods that are on the shelf. So the balance of those two, I think the more important of them right now is that customer inventories are starting to show room for some restocking.
I wonder if we'll see, if they cut inventories too much and have to go into overtime, how do we see that as far as employment on the other side? I mean, do they have to start adding? We're hearing from Silicon Valley, from out west, that people are actually starting to hire again. Eric Schmidt from Google yesterday said it. Obviously, a lot of people have trouble believing that. But what do you think as far as the manufacturing picture?
Well, I think, for instance, in the Silicon Valley, the computer industry and electronics did not go down as deeply as many other industries did. So they would be among the first ones that I would expect to see that. But I think as far as the manufacturing on whole, that it'll be quite some time before we'll see any new jobs created.
Let me just come out and give our viewers the headlines on Ford, because we're getting June sales out from Ford. They're much better than expected, down only 11.3%, and we were looking for a drop of 17%. So it's been a while since I've heard such a low number for a drop in auto sales, 11%.
Oh, yeah, and of course that's year over year, and the monthly number must be an actual increase in the month before, right? But Norbert, it's perfect to have the auto sales coming out while Matt and I are talking to you, because this is one reason why people are looking for growth broadly in manufacturing, is that automakers are coming off a very weak base, but they are selling some more cars. What are you hearing from purchasing managers in that industry and the related ones?
Well, the sense of optimism still isn't there. I think overall those industries are going to take a while. Of course, we're going to enter a period here, I think, where the month-over-month comparables for almost everything are going to look better. It doesn't mean necessarily that we're going to see a very high number when it comes to growth in GDP.
It's interesting here we're seeing Ford actually boosting third-quarter production up to 485,000 vehicles, 16%. So here we could see, obviously, a pickup in manufacturing as far as the auto industry. I mean, how much, Norbert, did the auto industry, did the drop really hit the economy and hit the survey?
Very difficult to tell based on the way we collect our data, and the drop was so precipitous that it was just total demand destruction across all 18 of the manufacturing industries. So it was hard to pick out who the bigger losers were.
Let's talk about prices for a second. I'm going to talk about this in the auto industry a little bit later on. You say prices have moderated and seem to be stabilizing. Was that a serious concern for manufacturers that maybe they can put behind them?
Absolutely. With the demand destruction that we saw back in the fall and then coming into the first quarter, in many instances there wasn't enough activity in the market to determine what market pricing was doing and what the level of market pricing was. And so there was a real challenge, not only for the prices that you pay for your inputs, but how to price your product based on the outputs to do that. Now that there's more stability and oil prices have caused this to firm up somewhat, but it makes it easier for manufacturers to know how to price their products.
Norbert, another economic report the market's focused on today comes from China, because their Purchasing Manager Index has showed growth, I think it was for the 5th month in a row now. Do you have any sense of that part of the world? And more broadly, your export orders index rose to 49.5. It's almost at neutral, heading towards positive territory. What are your survey participants saying about demand from overseas?
In general, I think, one, the fact that our export orders index moved up is positive. It is highly reliant upon what the value of the dollar is doing. As for the Chinese, we help them put together their index, and it's basically based on the same principles ours is. So I have a degree of confidence that it's showing a Chinese economy that's come back very quickly.
All right, hey, Norbert, thanks very much for joining us. Norbert Orr from the ISM. Kathleen, a pleasure having you, as always.